All right, what is happening, everyone? Real quick, just let me know if you can hear me in the live chat. I just want to make sure the audio is good. It's been a few weeks since we've been able to do a dividend happy hour, so I'm stoked to be back in the saddle with you guys. I know we are a few minutes early, but I was just sitting around, just getting set up, and it's like, why not? Why not kick this stream off a little bit early? We'll run it for about from this point, probably an hour, hour and 5 minutes. Trying to end it around the top of the next hour because we're having turkey burgers for dinner tonight, and I'm starting to get pretty hungry, and I've been thinking about them all afternoon, so I don't want to delay that too long. But ooh, finally, man, you watch Traders, Chris. Okay, cool. You guys can hear me just fine. Good to hear that. Good to hear that you can hear me. Wow, 54 of us in the stream already. That's crazy. Man, I really miss this. Like I said, it's been a couple weeks since we've done a dividend happy hour. The last couple of weeks have been pretty dang busy. Um, but at least for now, I can't think of anything that would prevent me from doing a dividend happy hour for at least the next handful of Fridays. I think I'm around for a while, so at least until like mid-May, maybe end of May. So I'm really, really happy about that. We'll have some good live streams. Um, but real quick, guys, not even real quick. What I really wanted to open this stream with was like, wow, it's what a week. What an odd week on the stock market. And I wanted to ask you guys overall for the week. I'm sure pretty much everyone here was up today, but overall for the week, where did you end up? Were you up for the week? Were you down for the week? Where did things settle out for you? I'd love to hear about that in the live chat. And I want to pull up on the screen and show you guys where I'm at, where I finished up for the week, and also um, so far year to date. I want to show you what's going on. And to do that, guys, we are going to jump over here to Snowball Analytics, which you can start using for free. There is a link to it in the description of the video. This is hands down one of my favorite portfolio trackers. So here we go. Let's scroll down a little bit, guys. Let's see. For the week, at least for the last 7 days, it looks like I finished up about 1.8% compared to last Friday. So that's not too bad, up almost 2% for the week. In the last month, it looks like we're still down quite a bit, still down 6.4% almost. Year to date, also in the red, not by much though, down 3.26%. We could definitely recover that, no problem. And then over the last year, we're still up a 9%. So overall, I think that's pretty good. In the last year, we're outperforming everything, outperforming the S&P by 5.5%, NASDAQ by a little bit more, and then SCHD by quite a bit, by 9% over the last year. So overall, it could definitely be worse. But I want to know where you guys are at. And also, well, we'll get to that in a minute. We got to do our normal cheers, but we'll wait till the top of the hour for people to get in here, because I just abruptly decided to start a little bit early, so I want to give people a few more minutes to get in the stream. Let's see. Ooh, Daniel, this is a really good question, actually. 300 shares of SCHD at 25 years old, is that good or bad? Dude, that's incredible. That's incredible. 300 shares at 25 years old, you are crushing it. And there's really no set number of how many shares you should have at a certain point in your life. It's just, the general rule of thumb is to just do the best that you can with what you have. And the fact that you're even thinking about investing at 25 years old is incredible. I think I started investing seriously when I was about 26 years old. And so somewhere around your age. But man, I'd say you're right on the money. At this point in time, just for comparison, I think I have about 355, 360 shares of SCHD. So you and I are pretty neck and neck there. But yeah, man, you're doing a good job. Let's see. Okay, so Vasco's down 8%. I think, is this for the week, Vasco, or is this for what's the time period on this? Horatio, what do you think of realty income? I think it's looking good. It's starting to make its way back up. I think when I checked earlier today, it was around $55 a share. Pretty decent share price. Could be better, could be worse. BDC addicted. What do you think about the Main Street pullback? I don't think now's a bad time to buy Main Street. I think it's still under $50 a share last I looked. I think Blue Owl Capital Corporation, OBDC, which is what I've been buying more lately, I think that's looking like it's at a better valuation. But yeah, I think you'd be just fine buying Maine right now. The yield is like right around 8%. So yeah, can't stick your nose up at that too much. So Turkey Man's down about 5 grand. Richard's down 2K for the or 2% for the week. There you go. Kyle's up 0.5% for the week. There you go. Joey's down 8%. Okay. Alan Kroger's the only thing in the positive for total returns. I get you. I get you. Aussie Dividend says, so annoyed it didn't last a little bit longer. The day things jumped, which was Wednesday, was when I finally had the money to invest in TGRO. Man, that's just how it goes, isn't it? But I was still able to get just over 15 shares of it. Well, that's great. That's fantastic. And, yeah, we'll see what next week brings, but I think we still have quite a bit of volatility ahead of us. I think if this week has taught us anything is that nothing's off the table. Wednesday we could be due for some more red. It could be some more green. I mean, I guess that's true any day, right? It's either one or the other. But yeah, I would not be surprised if we see things continue to go down a bit more from here. Obviously, it depends on, at least right now, it depends on what happens with all this tariff stuff. That seems to be what's moving things, primarily what's moving things right now, and investors' reactions to that and the market's reaction to that. So we'll see how things unfold. But, generally speaking, I think we're in for some more volatility. So buckle up either way, I would say. There you go. Chris says, I'm up for the week, especially with Walmart being up nearly 7%. Nice. Anders is down 5%, excluding 401k. Thieves overall up 6.3%. There you go. Let's see. Okay. Anthony's up 1.6%. There we go. Pat, yes. I started a few minutes early, Pat. I started about 5 minutes early. I was just sitting here hanging out, so I figured I might as well just go live and get a little more action in, a little more live stream action in with you guys. I miss doing this. It's been a couple weeks since I've been able to stream, so I want to maximize the time as much as I can. So, ooh, Teeps up 4.2% for the week. Nice. That's great. Year to date down 9, almost 10%. Well, that's not too bad, man. That's not too bad. There we go. Marcus is down 6%. Nice. Okay, guys, it's 5:02. It looks like everyone's starting to trickle in here. So why don't we officially get into it? Before we do, I just saw this comment from Teeps. Been using Snapstock a lot. All the stuff I care about, nice and clean. Awesome, man. That makes me really happy to hear. And thank you so much for checking it out. I'm really happy to have you using it, and hope you've been enjoying in using the Snap score on there. We're doing some more work behind the scenes. It's always a constant work in progress, but we're working on some other cool tools, some other cool features for it behind the scenes. And so I'm excited to continue evolving the platform. But anyway, guys, officially, now that we're at the top of the hour, welcome back to another Dividend Happy Hour. What is this, episode 133? I can't believe we've done this many episodes of the Dividend Happy Hour. That feels like a lot, but it's been a blast. It's been an absolute blast. I say it all the time, but this is one of my favorite things to do every week. I so much look forward to live streaming with you guys, and it feels so good to be back in the saddle. And thank you guys so much for hanging out tonight, for tuning in. And why don't we kick this thing off the best way we know how? So grab whatever it is you're sipping on. I got myself a little, actually caffeine-free Coke Zero, which has been great. And cheers. Here's to you guys. Thank you so much once again for hanging out with me tonight and for tuning in. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow. Because at the end of the day, that's really what's bringing us together. And also during times like this, thank goodness for those dividends, because those can really save you. So at least we have those. Feel fortunate about that. But anyway, cheers. So let me know a few things here in the chat, guys. I want to know, I've got a few questions for you. Number one, I want to know, what did you buy this week? Tons of great discounts out there. It's like overwhelmingly full of discounts. So let me know, which stocks did you add to your portfolio? Number one. Number two, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Like you saw, I got myself a little Coke Zero there. Delicious. Number 3, I want to hear, did anything cool happen to you guys this week? Whether inside of your portfolio or outside of your portfolio, I want to know, if there's anything cool that you guys would like to share. And also number 4, I'd love to know if we have any first timers here in the Dividend Happy Hour. In case this is your first time tuning into the live stream, welcome aboard. Just so you know, we typically do this live stream every Friday night. I haven't been able to do it the last couple of weeks, but on a normal week, we're doing this every Friday night starting at 5 p.m. Pacific time, 8 p.m. Eastern time. And we usually run it for about an hour. Usually it's a little bit more than an hour because, as you'll find, I like to ramble on. I kind of have a hard time like ending the stream. And that just really speaks to how much I enjoy doing it, if nothing else, or more than anything else, I should say. So let us know if this is your first time here in the chat. So let me go through, guys. I want to go through and just pull some of your guys' questions. And also, too, if you guys have any questions that you want me to bring up, any stocks you want to look up here, just drop them in the chat, and we'll spend our time tonight just going through all of this stuff. But let's see. Let's go through and see who we got in the building. I'm going to go all the way up to the top and just kind of give some shout outs real quick. Let's go. I might have to go back. We'll go all the way to the top. I see Chris. I see Eddie, Trialed Faith, Jake's here, Thieve, and a lot of you guys I've already interacted with. But nonetheless, Turkey Man's here. Marcus is here from Puerto Vallarta, from PV. There you go. Alan's here. Joey, good to see you. Pokemon's here. There you go. Thunderclap in the building. Nice. Monaco's here. What's up, Monaco? Daniel. Vasco, of course. Tony's here. What's up, Tony? Horatio, BDC. Richard, Kyle. Good to see you guys. Aussie Dividend. Anders is here. Who else? We got Taylor. What's up, Taylor? Just got your haircut and picked up some SCHD and VOO. You can't go wrong with those two. I'll tell you what. Unbeatable combination. Anthony's here. What's up, Anthony? Scott's in the building. We got Pat. What's up, Pat? Robert, Jonah, Aqua Escapades. What's happening? Howdy. Good to see you. Reading Fun is here from Sydney, Australia. That's awesome. Getting tongue-tied there for a second. Boaz is here. What's up, man? Marin is here. Good to see you. Nerdy Film Girl. So excited I'm catching one of these live. Well, me too. I'm stoked to have you in here. I'm guessing this is your first time in the live stream. So welcome aboard. Welcome aboard. I know a lot of you guys catch the replay, but actually being here live action, I think, is a little bit of a different experience, hopefully for the better. And I hope you enjoy it. Let's see. Logan's here. What's up, Logan? Robert wants to know what I think about Google. We'll take a look at Google. Jonah wants to know about Texas Pacific Land Corp. Remind me the ticker symbol. I think it's maybe TPL. Let me double check that. Yeah, it is. Okay. Let's keep going. MLiv is here. Hope you had a good week as well. Ooh, Fast Eddie, what year did the first happy hour start? So we've been doing it 133 episodes. So at least probably 2.5 years ago. So it probably would have been 25, probably like fall of 2022, maybe. I don't know. You'll have to go back on the channel. I mean, all of them are up on the channel. So if you head over to my channel, head over to the live stream tab, just go all the way back up to Dividend Happy Hour number 1. And it'll show you the exact date there. But I think it was probably late summer or fall 2022. Let's see. Let's keep going. Now it shows me, and you guys are talking about all of your picks. I see a lot of SCHD, see a lot of VOO. Danny, nice pickup with 27 shares. Good job. Logan picked up some Merck. Yeah, a lot of SCHD. I'm seeing that more than anything. More than any individual companies. Fishy Man picked up some 3M, 13 shares. Okay. I haven't heard anyone buy 3M for quite a while. Stephen with a couple, or Stefan with a couple, Amazon, Google, and Uber. Nice. Yeah, I see some Visa and Vici. This is cool. A little milestone here too. $600 a year in dividends. Congrats on that, Vasco. Pretty cool too. A solid $17 in dividends for the month, or for March at least. So I'm guessing that's a record. Good job. Let's see. Yeah, Pat picked up some SCHD and Realty Income. Nice pickups here. Nike for sure. Crazy to see Nike in the 50s. I think last time I mentioned it in a video, it was in the 60s or 70s. It's just crazy to see how cheap things are getting. Target especially. I don't know what Target's at as of today, but I was looking at it yesterday or Wednesday when I was chatting with Ari, and it was like $90 a share, which is crazy. $90 a share, and the dividend yield was just a hair below 5%. So insane. Which makes me think I'm kind of surprised to not see more Target here in the live chat. I would have figured at least one of you guys would be picking up some Target, but I don't see. Yeah, I don't see a single. Oh, no, there we go. I spoke too soon. There we go. Chris came through. So he's got the usual buys and started 3 new positions: Target, Caterpillar, and Amazon. There we go. Let's see. Pablo and Luke, first time in the live stream. Nice. Good to see you guys. Let's see. Drinking a Capital Brewery Summer Ale. That sounds delicious. Picked up 10 shares of Nike. Good job. Good job. Yeah, I see some Vici too. There you go. Ooh, first timer here. How do you feel about Coca-Cola stock? I've been looking at it, just wondering your thoughts. Yeah, I mean, Coca-Cola is one of those that you can't really say too many bad things about it. I mean, it's been a pretty legendary investment. Very safe, sleep well at night business to own. I mean, I say that as I'm sipping on a Coca-Cola. People love their Coca-Cola. What's the current share price at right now? I know the share price saw a pretty big run up, $71.43. I don't know that I would be interested in buying it right now. I think it's a bit steep in value. The growth is decently consistent. Looks like the revenue growth is about 9% on average over the last 5 years. Earnings per share growth is about 8% on average over the last 5 years. So it's not terrible, but I think it's still a little bit rich in price. So yeah, can we look at Caterpillar? We sure can. I'll save that one. Nice. Yeah, so it's always cool to see. We've got a lot of first timers here in the live stream, which makes me so excited. I hope you guys come back and tune in live in the future as well. It's always cool to read the comments from you guys saying, yeah, I usually catch the replay, but this is the first time actually tuning in live. And you'll have to let me know too, what you think, if it really is different watching it live versus the replay. I hope it is. Ooh, Salt's got a good question about waste management and Main Street Capital Corporation. Yeah, Teeps. I was man, there was one point I was up to $96,000. I was just a hair shy of hitting the 100K mark. But we'll get there. I'm not in any rush. We've got plenty of time. It seems like things in the portfolio are settling around the $85,000, $87,000 mark. And once all of this stuff blows over, I could see. I say once, if and when all of this tariff stuff blows over, I'm thinking that we'll just end up going back up to where it was before all of this. And we should be in an even better spot because I've been buying and next week I'm actually going to put a decent chunk of change into my portfolio and add to a particular stock. I'm not quite ready to disclose which one it is yet because it is a new position, and I didn't mean to tease it this early, but we're kind of on the subject. So I'm starting to get to a point where I'm adding a bit more aggressively. So we'll see what happens. We'll see where it all shakes out. Let's see. Yeah, I see some Chevron. Oh, Ken, thank you so much for the super chat. That's really nice. Keep up the great videos. I really appreciate that. All right, guys, let's get caught up in the chat here. So So we've got five great questions to go through. We got 5 great questions to go through here so far. Yeah, Nick, how are you feeling about SCHD? Man, I'm always feeling good about SCHD. Always feeling good. Always feeling good. Yeah, Adam. What's up, Adam? Good to see you. Lisa J. Good to see you. Korean Cardboard. Great to see you, my friend. Oh, there we go. First dividend happy hour, May 18th. My friend Boyer's birthday. May 18th, 2022. Thanks, Anders. I appreciate you finding that. Okay. Ooh, little captain with Pepsi for that guy. That sounds good. Sounds really good. Okay. Let's see. I'm just getting caught up. Yeah. MLiv has a question about Intel. We'll go through Intel. I'm not that hyped on it, but Anthony, I'm surprised you haven't hit 100,000 subscribers yet, Ryan. In due time, my friend, in due time, we will get there. Building a YouTube channel is a lot like, and I'm going to apologize in advance because this might become a bit of a tangent, but building a YouTube channel is a lot like building a dividend portfolio. It is slow and steady. And well, it's not always the case, but it is the case building a YouTube channel talking about dividend investing. It's, excuse me, even compared to just general investing. And like if my channel was just about ETFs, dividend investing is just such a smaller market. There's just so many less people interested specifically in dividend investing than there are other, financial themes. And or financial topics or, financial subcategories. And I could make videos that are maybe a bit more general, a bit more broad. But at the end of the day, I want to make videos that I'm interested in making. I want it to be, it's just videos, it should be fun. And so I have fun making videos talking specifically about dividend investing. My channel's growing very consistently, slowly but surely, but very consistently. And so as long as that's the case, kind of like with what I was talking about with hitting 100K in the portfolio, I've got all the time in the world to hit 100,000 subscribers, and we'll get there. I think it'll happen sometime this year. But thank you. I think that was a compliment. So thank you very much for saying that. Let's see. Oh. Talking about the subscribers, not the portfolio. Yes. So thank you so much. I totally missed that. Yeah. And with that said, it's funny because kind of the subscribers now and the portfolio value are like kind of not too far off from each other. And the next milestone is the same for both of them. So, but yeah, 80,000 subscribers. With that said, kind of on the same subject. Thank you guys. Thank you so much for all of the support. Because it's just crazy. It's just crazy to me that you guys keep tuning into my gibberish. I don't get it. I don't know what's going on with that, but I'm not going to question it. It's fun. This is fun stuff. And so thank you guys for all the support. Seriously. Ooh, Yum Brands. Yep. This is a good question from Drew about cash. So we'll save that. Let's see. Yeah, thank you guys. You guys are enjoying the live. I like that. That's good to hear. Okay, Nona's got a good question about the dividend yield in the portfolio. Boaz, any new episodes of the Founders Podcast? Truth be told, I haven't really been listening to some of the new episodes. They haven't really jumped out to me. So I don't know. I'm kind of like that with podcasts. And maybe you guys will understand this. I'm actually like that with YouTube videos too. I'll go through phases where I'll listen to a ton of podcasts. It's like all I listen to. And then, after kind of going through that phase for a little bit, I get burnt out on them. And then I stop listening to podcasts or just don't listen as regularly. And then eventually I find my way back to it. And it's kind of like that with YouTube videos as well. There are periods where I just binge YouTube. But then there's periods where I don't really watch a whole lot of YouTube videos. I kind of get burnt out on it and I need a little bit of a break. Do you guys ever get that too? Or is that just me? Tony's got a good question about paying for the house. Cool. So now we have 9 9 great questions. And we'll actually start it off with this one here from Nerdy Film Girl, who says, I see a lot of people having both SCHD and SCHG. Isn't that super similar? Why would you need both? That's a really good question. You know, the ticker symbols are definitely very, very similar, and both of them are Schwab ETFs, but they're actually quite different. So SCHD, and we'll go over to Seeking Alpha to help us break this down. So let me hide that for now. Let's go over here. You guys can see that. So let's go over to SCHD. So as we can see, SCHD here is the Schwab US Dividend Equity ETF. So obviously this is a dividend-focused ETF. I call it the holy grail of dividend ETFs. And if we look at the top 10 holdings, we'll see, a lot of great dividend payers. We've got ConocoPhillips, Verizon, Coca-Cola. You've got Chevron, Lockheed Martin, Pepsi. List goes on and on. In total, there are 100 great dividend payers in this ETF. Now, on the other hand, if we go over to SCHG, we can see just right away, in nature, it's a bit different. Whereas SCHD was a dividend-focused ETF, SCHG is a large cap growth ETF. So with that said, and if we look at the breakdown of the holdings here, it's like these couldn't be more different than what we saw with SCHD. This is going to look a lot more close to what you might find in the top 10 holdings of the S&P 500. And so with that said, these two funds actually balance each other out very, very well, and give you exposure to two different kinds of investments, ones that maybe will see more share price appreciation, or ones that maybe more lean towards that when it comes to, your returns versus, with SCHD, you'll still see some appreciation, but you'll get a lot more in terms of the dividend, let me rephrase that. With SCHD, more of your total returns with that fund will be made up of dividends compared to SCHG, which I don't even know if this has to pay some dividends. Yeah. So totally different. 0.5% with a 3% 5-year CAGR, whereas SCHD is a 4.2% yield and a near 11.5% 5-year CAGR. So hopefully that makes sense. Hopefully. Vasco's got a good question about the spreadsheet. I'll save that one. I'll circle back to that. One for you. So, okay, let's jump into some of these other questions here. We've got 9 more to go through. And just real quick, guys, it looks like there's about 220 of us in the live stream. I just want to thank you guys again so much for tuning in. Means a lot that you come to watch this. So Robert wants to know, what are your thoughts on Google? And that's a great question. I was kind of talking about this with Ari on our most recent episode of The Deep End, which you can watch if you head over to the channel. You can find it on Spotify, on Apple Podcasts. Check it out anywhere you want to listen. But we were kind of talking about Google. He asked me, if I had to pick any of the Magnificent 7 stocks to invest in, if I had to take all of my invested dollars and put it into just one of the Mag 7 stocks, which would it be? Go all in. And out of the bunch, for me, it came down to being between Microsoft and Alphabet, and I opted for Alphabet. Now, it's pretty hard not to think highly of this company. I mean, obviously, it's a behemoth of a company. We all know more or less what Alphabet does. And looking at the financials, it's pretty picture perfect. I mean, this is exactly what you'd want to see. From top to bottom, everything is up and to the right with double-digit growth rates as well. So that looks really good. Very high margins. We've got about 60% gross margins, about 30% net profit margins, and 20% free cash flow margins. So Google obviously is a very, very profitable company. As far as debt goes, looks like they have only $2 billion of debt, net debt on their balance sheet, and they're bringing in more cash flow every single year than they have debt on the balance sheet. And we can tell because the net debt to free cash flow ratio is less than 1. So, all of this is just, it's exactly what you want to see. This is looking really good. And, now they're a dividend payer. What's not to like about that? I don't know if we'll see, well, we will see it. I don't know when they'll raise their dividend this year. But it would not surprise me to see the dividend growth rate, in the 20% range, maybe possibly even in the 30% range. Nice returns on invested capital too. 21% over the last 5 years on average. And for me, having said all of that, it kind of begs the question, okay, well, if you think that way, why wouldn't you own it? And it's a good question. It's something I go back and forth on in my head quite a bit. Um, and here's where I kind of settle with this. I'm buying into the S&P 500 every single week, and so just through that, I'm getting increasing exposure to Google every single week, or to Alphabet, whatever you want to call it. And I think for now that's probably good enough for me. Um, but there was a brief period with all of this chaos going on, and it still holds true. I don't want to completely renege this thought, but because I'm not in much of a rush to add to this position, or to add to this company, I like it. I understand what they do. This would be probably a pretty suitable one for me to own. Um, but I'm not in much of a rush to own it because I'm already adding to it every week. I'm already getting increasing exposure. But with that said, if this stock were to get down to, I mean, it's at a pretty fine valuation right now, less than a 20 PE ratio. But if the share price were to get down to a level that you couldn't ignore, like for me, that'd be probably like $120 per share, which I know is pretty low. But like I said, I'm not in a rush to buy this stock. So if I'm going to buy it, I'm going to be a bit more conservative with it, and get at a price that I really think is a screaming deal. I'd probably start a position if it got into like the $120 per share range. So that's kind of my take on it. Kind of my take. But I don't know. At the same time too, and this is dumb. This is a dumb thought. You guys are probably disagree with this, but well, maybe not. I don't know. Let me know what you guys think about this. I think it's really fun. Like, part of the enjoyment of investing for me in individual companies is finding these kind of hidden gem, more under the radar companies and investing in those. I think it's almost too easy to buy. It's almost too easy to buy Alphabet. It's almost too easy to buy Microsoft. And on one hand, I'm sure you can understand me saying it's fun to find these hidden gems and these under the radar stocks and kind of go hunting for these diamonds in the rough. But on the other hand, it's like, should that stop you from buying these undeniably great companies? Probably not. Probably not. So, I'm kind of a contradiction in that way. I do realize that. But that's kind of where I settle with all of that. Hopefully that makes sense. I know that was a very roundabout way of answering this. So, oh, Dan, man, that honestly makes my day to read that. Thank you so much. You are the reason I started investing. Wow. Wow. Thank you, man. And I'm proud of you. I'm proud of you, all of you guys, for getting started and taking action and doing something positive for your future self. You will never regret starting. Never. So good job. Here's to you. Seems like you want to buy Google, but are trying to talk yourself out of it. Yeah, maybe. I probably need to think about it a bit more, but that's where I end up. Like, I'm in my mind, I already own Google. So, you know what I mean? That's kind of where I get tripped up over it, I guess. No, Jonah. I'm actually perfect timing, Jonah, because that was the next question we were going to go into. Have you ever heard of the company Texas Pacific Land Corp? I'm wondering what you think of their business. Yeah, so I've actually covered this one a few different times on the stream, and it's pretty crazy. This is like, speaking of hidden gems under the radar, maybe not so much because this one's definitely been getting some more recognition lately, but for a while there, this stock was definitely a hidden gem. So the ticker symbol is TPL, guys, Texas Pacific Land Corporation. And in a nutshell, what this company does is they own a ton of land out in Texas, and then they lease it out to these big oil companies to basically drill on their land. And then they also receive royalties from any of the oil that's found there. I think that's probably an oversimplified way of explaining it, but in a nutshell, and that's kind of the gist of it. Um, and real quick, just kind of a sidebar, a super chat came in from Osvaldo. Thank you so much, by the way. Would you ever buy long-term calls on SPY or SCHG? Never say never, but I don't trade options. So at this point in time, um, no, I don't have an interest in doing that or trading any sort of options, whether it's cash secured puts or covered calls. It's not my cup of tea at the moment. But anyway, getting back to TPO, we can see it's been crazy. I mean, in the last year, it's up over 100%. Over the last 5 years, it's even more wild. I mean, look what it's done since in the last year. It's gone from 465. It's basically tripled, right? And since 2020, it's 10x almost. So it's been pretty crazy seeing what this share price has done. Valuation's looking pretty gnarly. 62 PE ratio, 435 price to free cash flow, very low earnings and free cash flow yields. Regarding the dividend growth stats, or the dividend stats, excuse me, pretty typical dividend growth stats, low starting yield, pretty decent dividend growth rate. But look at these financials, guys. It's pretty wild. Very, very strong growth. From top to bottom. I don't know exactly what happened with the free cash flow per share here in 2024, but prior to that, look at this, guys. I'm sure that the CAGR here, the growth rate was in the 20s, just like the revenue in the earnings per share was. But charts are looking good there. Obviously, just because they own land and are generating royalties on that, there's really not many, operating costs or operating expenses, so the margins are going to be very high. Pretty much from top to bottom, the gross margin in 2024 was 100%. The net income margin, net profit margin, and free cash flow margin were low 60s, consistently in the low 60s. So that's good. No debt on the balance sheet. Company has more cash than they do debt. And yeah, pretty solid dividend payer. I'm guessing that they pay out special dividends every other year. That's why we're seeing these big spikes in dips here. Which may be impacting the 5-year growth rate here. It could potentially be higher with the special dividends there. Very solid returns on invested capital, over 30%, almost 40%. So yeah, there's a lot to like about this stock. A couple years ago, I remember I was considering it, and at the time, I don't know any information on this right now, but at the time, I think they were going through a pretty big lawsuit. There was a pretty big lawsuit between like the company and the shareholders, or there was like some sort of class action lawsuit building against the company. And I don't remember the specifics, but even then I remember it was one of those where I was looking at it then and thinking, dang, it's already seen a crazy run up. I remember thinking it was expensive then, but yeah, pretty crazy. Yeah, trying to find a reason not to invest in it. I don't know. It's tough to say. I mean, one of the reasons not to invest in it right now is just because of the price or the valuation. But then again, that's a double-edged sword. Like I just said, I remember a couple of years ago thinking that the stock had seen too much of a run up and it was bound for a pullback, but that didn't really happen. And by the way, I felt the same thing with Rollins, and you guys know that story. So I don't know. It seems like a good company. I would look more into that lawsuit I was talking about, and maybe it's gone by now. I don't really know what the story is because I don't really keep close tabs on this company these days. Anyway, moving on. Chris wants to take a look at Caterpillar. We can definitely do that. So let's jump back over here to the screen. And by the way, guys, I forgot to share the snap score on this one's pretty nice. 7.1, above average company. The only reason the growth has a 6 is because the drop in free cash flow right here, but this could be a mistake. I'd have to look more into this to know exactly what happened here. But otherwise, I think realistically, the growth's closer to probably a 9 or a 10. Debt situation's looking really good. I don't know why it's giving it. Oh, it's giving it a 6 because there's no interest coverage listed here. So the debt score really is probably closer to a 9 or a 10. Dividends and buyback, same thing. So I bet you really the snap score on this company should be between 9 and 10, probably 9.5 and 10. And just for like comparison, real quick too, before we jump over to Caterpillar, Visa, which has the one of the highest snap scores I think I've seen. Nvidia might be right up there with it. MasterCard's not too far behind it, but a 9.35. So I would imagine that TPL probably really has the more of these characteristics than is letting on, or more of these scores in reality. So very high quality company. Okay, Caterpillar. And by the way, guys, in case this is your first time seeing the snap score, hearing about it, this is a proprietary, I never use that word. I think this might be the first time I've ever said that word. Scoring system that we implemented into Snapstock, and I actually came up with this myself, just the grading and the weighting, and basically it takes all these different categories that we track: growth, profitability, debt, dividends and buybacks, and capital efficiency, and it gives it a score 1 out of 10, just based on like how much the company is growing, how profitable it is, the dividend stats, the debt situation, stuff like that, and then it blends it all together to spit out an overall score. So and obviously, the closer it is to 10, the higher quality the company is going to be. And it doesn't take valuation into consideration, you'll notice, because valuation really doesn't play any sort of role in gauging the quality of the business. So we don't count that in the score here. So right off the bat, Caterpillar's got a very, very high snap score, 8.15. It looks like we've got some really high growth numbers. Profitability is not too shabby. It's a 6. Which is no surprise. I mean, this is a heavy machinery company. I'm sure that their margins aren't going to be the highest because of that. A lot of manufacturing. So that's understandable. Debt, they have a perfect score there, which I'm really excited to see what that means. Dividends and buybacks pretty solid. So I'm guessing this is a pretty, the dividend growth rate's pretty nice. They're probably buying back shares. And then capital efficiency is 8 out of 10. So we're probably seeing some nice returns on invested capital too. And with that, looking at the valuation just right off the bat, look at this, guys. This looks pretty promising. 13 PE ratios at a 13, which is about 34%, the 5-year average. Price to free cash flow is about 24.5% below the average. Earnings yield and free cash flow yield are both very, very high and quite a bit above the averages. So from a valuation standpoint, Caterpillar is looking pretty solid. The dividend yields, it's interesting because these look pretty good, much lower than the averages, or kind of detached from the averages. But the dividend yield's right in line with the 5-year average. So it's actually a little bit below, which is interesting. But anyway, if we scroll down, this looks pretty good. What was the growth score? 9 out of 10? Yeah. So really solid earnings growth between 2020 and now, basically. The earnings per share looked like it 4x since 2020 and has doubled since, like, not counting the pandemic year. It's doubled since 2019. So that's looking really good. Pretty consistent revenue growth, very solid free cash flow per share growth as well. Very consistent, and then very aggressive going into 2023. So it makes sense to see that high growth score. It looks like the margins are actually improving over time. So I think that looks pretty good. Looking at the debt situation, I see here. So what's going on with this? Did they pay back a ton of debt? Maybe this is throwing it off here. Let's actually cross-reference this with Seeking Alpha. So I want to go over to the financials, to the balance sheet. Take a sip of Coke while that's loading. Guys, I've noticed that all week I've noticed this. Seeking Alpha has been taking so long to load. Even when I go just to the homepage, more often than not, I'm sitting there for a good 60 seconds waiting for it to load. I don't know exactly why that is, but maybe it's just an issue I'm having. Maybe it's just my computer. I need to clear my cookies or something like that. But I've definitely noticed this all week long. There we go. Okay, so let's scroll down, look at the net debt here. Yeah, okay. So it's a bit wonky. Looks like this isn't quite right here. But still, even in 2023 and years prior, the net debt to free cash flow situation is improving over time. So the 5-year average is 4.4. I think that looks pretty good. The interest coverage is very high. Kind of the benchmark that we want to look for is about 8. And even in 2020, it was still over that. So I think the debt situation looks just fine. Looking at the dividend stats, I mean, we've kind of already seen them earlier, but a near 2% yield and a 7% 5-year growth rate and 10-year growth rate. So the dividend growth has been very consistent over the last decade. And I think that's fine. I think that's pretty good. Um, 7% growth rate's not bad, but I would want to see a higher starting yield with a 7% growth rate. That's just me personally. I'd want to see the dividend yield at least probably 2.5, maybe 3% with a 7% 5-year growth rate. If the 5-year growth rate was more like, or even the 10-year was double digits, then that would be a different story. But if we're getting a dividend yield less than 2%, I would prefer to see higher dividend growth. But I don't know. This is still fine. Still looking really good, very consistent. And at the end of the day, that's, what more can you ask for there? And they've also been buying back shares at a pretty decent rate. Looks like they're buying almost 3%, buying back almost 3% of their shares on average over the last 5 years, and not too far off from that over the last 10 years. So, yeah, I think a lot to like about this company. Good to see the returns improving over the last few years. They're heading in the right direction for sure. And I think if you were to buy Caterpillar, it doesn't look like now is a terrible time to do so. Down 20%, almost 20% here year to date, not too far off from its 52-week low. Like we established, this all looks really good. So I think if you're going to buy Caterpillar, there are plenty of worse times that you could be doing so. Okay. Yes. Thief says it's been a problem like that for you too. Gator says you need new fiber. No, my internet's just fine. It's literally only happening with Seeking Alpha. It's the only site where that happens. Okay, so we've got yeah, Derek, this is a good point here. You're growing the channel so much you won't be able to keep up with all the questions. That is very true, my friend. It is it's a struggle sometimes, and I think that's a good opportunity for me to say that I want to apologize to you guys in advance if I don't get to your questions or if I skip over your questions. Just know it's not intentional, and it's exactly what Derek here said. It's we've got 220 people here in the live stream right now. A ton of great questions coming in, and at the end of the day, I'm only one guy, and we only have about an hour to get through everything. And that's just kind of the nature of the beast, unfortunately. And so with that said, I want to apologize if I do skip over your question or if I don't get to everything or everyone. It's definitely not intentional. So I hope you guys don't take it personal, and just know that I'm trying the best I can. And the good thing is there's always next week. And another good thing is you can always drop me a comment after the video, and I always respond to my comments. And you can always shoot me an email, like I said. I think I said that. I don't know if I did. Anyway, there's always next week, so you can come back next week and ask your question or drop it in the comments after the live stream ends, or just shoot me an email. I'm pretty good at responding to all of my emails. So one way or another, you can get in touch with me and I can make sure your questions get answered. So, okay. So Salt, moving on to this next question here. We've only got about 20 minutes left in the stream, so I'm probably going to rapid fire some of these guys. Actually, we have 5 now, including this one. So Salts here says, glad to make it to another stream. One question for you. Do you have an opinion on waste management in a volatile/bearish time like this? That and Main Street Capital Corporation, of course. So let's start with waste management. When it comes to companies like Waste Management or Republic Services, which is RSG, both of them are garbage companies, trash collecting companies, trash management companies, well, hence the name Waste Management. I really can't think of what could come in and disrupt a business like that. And I think I haven't looked at Waste Management for, I don't know, a couple weeks, maybe a little bit longer. But last time I looked at RSG, which is Republic Services, it like hadn't skipped a beat. I actually think it was up. And it looks like the same is true here with Waste Management, up 2.5% in the last month, up 14% here in 2024 or 2025, excuse me. Wow. So businesses like this, I mean, they're going to hold up very well, and it's no surprise. No matter what's going on in the economy, no matter what's going on in the world, people have garbage, and that garbage is going to need to be dealt with. And you're paying for your garbage. It's just kind of like your electricity or your phone bill or something like that. you're going to make sure it's paid for. There are plenty of other things you're going to stop spending money on and cut back on before you stop paying for your garbage to be picked up. So I think this is a very great business to own during a downturn or during any sort of volatile time in the market. The problem though is as we can see, the opportunities to buy a company like this at a respectable price are almost non-existent. I think you'd really need to see a solid pullback on this company to get it at a decent price. Maybe 100 under 100 is not, or 100 under 200 is not too bad. Yeah, not too bad. It looks like it really started taking off here back in October 2023. So that's the problem with it. But yeah, I think it's a great company. I think Republic Services is another really solid one. That's who handles my trash, and that's because of that. That's the only reason. That one is on my watch list over Waste Management. I would love to own it, just because, like I said, they're the ones who pick up my trash. So why wouldn't I want to invest in that one? And if you look at we'll just look at the growth metrics real quick. As you can see, it's very consistent grower. So yeah, I feel pretty good about a company like this. And as far as Main Street Capital Corporation, it can be resilient in a bit of a different way. So a company like Main Street, they directly are not that impacted by like tariffs, for example. They will more so be impacted by interest rates. And just kind of zooming out a little bit on that, let's think about what a business development company is. I mean, and what they do and how they generate revenue. They generate revenue by investing in or loaning money out to these middle market companies that need financing. And so their revenue is generated from the dividends or the interest income that they receive from the companies that they either invest in or loan money out to. So that's not necessarily going to be impacted by tariffs. A lot of the loans that they issue are floating rate loans, so they will be more so impacted by interest rates. And that's actually why we've seen business development companies do so well over these last few years, because we've been in a higher interest rate environment. So as interest rates go up, generally speaking, business development companies will bring in more money. And they have to pay out 90% of their taxable income to shareholders. So, we directly benefit from that. And that's why we're seeing these companies like Main Street or Blue Owl. I don't know if Ares is, I'm sure Ares is as well, but that's why we see these business development companies paying out these growing special dividends every single quarter. They're flush with cash right now. Now, with that said, one way that these companies can be impacted by something like tariffs is if their portfolio companies or the companies that they loan money out to are impacted by tariffs. And for some reason, that means they're not able to pay their dividend or make good on their interest payments. But I'd be hard pressed to think that will happen wide scale for any of these business development companies, especially ones that they loan money out to. So with that said, I still think that business development companies are pretty, safe ones to hold right now. Going through what we're going through right now specifically, I still think they're fine to own. Hopefully all of that makes sense. Let's see. Okay, so yeah, hopefully that makes sense. Sorry, guys, I had a little brain fart for just a second. Okay, so now let's jump over to this next one from MLiv. Can we talk about Intel? Really considering starting a position now. Let me know what you guys think about Intel in the live chat real quick. I want to hear your guys' opinion too. But yeah, let's take a look at Intel real quick. I've got to say, it's not a company that I'm super fond of right now. I actually used to own Intel. I think I sold out of it maybe last January or February for a nice little profit. Don't know how I pulled that off. But yeah, I'm not a big fan of Intel. I mean, it's definitely come down in price. It's less than $20 per share at this point. I think I sold when it was in the mid 40s. Russ did the same. We actually sold right around the same time. So it's definitely gotten cheaper, but there's good reason for that. The revenue has been declining since 2021. So it's really come down in revenue. It's dropped by quite a lot. Holy cow. And over these last couple of years, at least, the earnings per share has been negative. Free cash flow per share has been negative since 2022. So this company is effectively losing money, while at the same time, obviously the net profit margins and free cash flow margins are going to be negative because these are negative. But at the same time, the gross margins, the gross profit margins are declining as well, going from 55% down to 40%, or actually 32% in 2024. So, and they're increasing debt. The debt's going up. All of this is going on at the same time. Cut the dividend. Just not a lot of good. I'm looking at this and I'm thinking there's nothing good happening with this company. There is no reason. I can't think of a reason why anyone would want to own this company. I feel like crazy for wanting to have it at some point, but I had it back in here. I was buying it, back in 2020, 2021, before all of this happened. But then once this stuff started going on, I gave it the benefit of the doubt for a couple years, and the situation just kept getting worse. So, yeah, I just can't think of a good reason why one would want to own Intel, unless you really think that there's going to be a big turnaround ahead, and this company or the industry well enough to understand whether or not that turnaround is realistic. I don't. So I think that's another reason why I decided to get out of it. So yeah, it seems like for the most part, you guys are sharing a similar sentiment. Got to shout out Dave. What's up, Dave? Good to see you, man. Getting hot here in Vegas, huh? Pretty toasty. Okay, so guys, we've got 4 more questions left, 10 minutes. Let's see if we can bust them all out in these next 10 minutes or so. We'll probably go over. Who are we kidding? Not too much longer, though, because I got some turkey burgers waiting for me. So this is a great question from Drew. Can I get some opinions on how much cash you should keep in your portfolio when you're buying into the dips? Is it a certain percent? And I don't know if there's a hard and fast rule for this. I like the idea of having some cash set aside, just to be prepared for, dips like this. And I think it's prudent to consistently invest and consistently dollar cost average in your portfolio, while at the same time, like, building up a cash position on the side that you can deploy in larger amounts when opportunity arises. Truth be told, that's something I've not really been great about. I have got a decent chunk of change sitting in a high yield savings account, but I think some of that I need to actually put into, like, my Charles Schwab account, and put just in, like, a money market fund for easier access for exactly what I just described. And for me, like, I'll just speak personally, because that's really the only angle I have to answer this question. I like the idea of having like $5,000 to $10,000 set aside, like specifically earmarked for investment opportunities. I think for me that feels like a really good amount, but at the same time, this is a subjective thing. It totally depends on your situation. It totally just depends on your situation. I'll just leave it at that. And so with that, there's not a hard and fast rule, but I think if you can somehow balance investing regularly and regularly buying shares, if you can somehow balance that with setting aside cash specifically earmarked for investing, while at the same time setting aside even more cash specifically earmarked as like an emergency fund, I think if you can do all of those things, you're kind of getting the best of all worlds. So I think that ultimately should be what you shoot for. So, and I'm going to screenshot this, Drew, because I think this would be good to answer in a newsletter and also in a future video. Thank you for the really good question. That's a good one. And it's something I don't think I've ever talked about it on the channel. So okay, so guys, a couple more here. So this next one's from Nona. What is your total dividend yield for the entire portfolio? That is a great question, and I'd love to show you. So let's jump over here. Let's take a look at my dividend portfolio tracking spreadsheet right here. Right now, the portfolio is sitting at 87K, guys. Nice day, nice way to end the week. And right now, my portfolio's yield, this combines both of my accounts, my taxable account and my Roth IRA. And I'll show you the individual breakdown between the two accounts as well. But the combined total is a 3.85% yield, 4.3% yield on cost, with a pretty nice dividend growth rate. I'm very happy with these dividend stats. Pretty nice yield, close to 4%, nice dividend growth rate, almost 9%. And if I can just rock with this for the foreseeable future, I think that'll look pretty good. And here's the income breakdown too. Every single year I'm at $3,350. We're getting so close to hitting that $3,600 goal, guys. I mean, we're still $250 away, but I feel like things are growing so fast. I mean, we'll definitely be there by the end of the year. I'm very interested to see where things settle out. It'd be awesome if we could hit $3,800 in projected annual income, but we'll see how it goes. Either way, this breaks down to about $280 every single month, about $64 a week, or just over $9 per day. So that's where things are sitting, looking pretty good. Just over in the taxable account here, the yield's a bit higher. It's just over 4% with a nice yield on cost, actually at 4.6%. Wow, that's actually getting pretty high. Similarly, we've got a high dividend growth rate here too, 8.65, which is not too much lower than the overall dividend growth rate. So that's good to see. Looking at the Roth IRA, the yield now is sitting at 3%. Usually it's not as high. Usually it hovers kind of in the mid twos, like 2.5, 2.6, 2.7. I think this is the first time I've ever seen that this account's yield at 3%. And the dividend growth rate is going to be a bit higher at 9.4%. And a big reason for that is because SCHD just makes up so much of this account. It makes up 60% of the Roth IRA here. So yeah, that's where things are sitting right here. And I want to know too, like for you guys, where are you sitting? Where's your yield at? If you know that information, where's your portfolio's dividend growth rate at too? I'd be curious to know. Curious to know where you guys are at with that. Just kind of see how you guys are structuring your portfolios. Great question, Nona. Okay, so this last one here, guys, is from Vasco. Vasco says, Ryan, I start to use your spreadsheet and have a question. What is the difference between the market return and the total return? That's a great question. So why don't we go back over here to the spreadsheet? I will show you. So let's zoom in just a little bit. Don't worry, guys. I don't have the new position loaded up on here yet. I'm going to hold off on that until I'm ready to reveal it. So over on the spreadsheet, yeah, he's referencing these two columns right here, market return and total return. So market return is just the share price return. So it's just the difference between my average cost per share and the current share price. That's going to give you your market return. The total return is this number including dividends. So basically you take the total profit from the share price returns or the market return, and then you add into that the total dividends received for that position, and that's going to give you the total return right here. So hopefully that makes sense. And you'll always see the total return higher than the market return just because those dividends will add more to your overall return. So hopefully that makes sense. I'll leave it here for a second so you guys can just see the difference between what that just so you can see the full spread here in the portfolio is what I'm trying to say. So doing pretty good on a total return basis, only 2 stocks down in the red. We've got a few more that are down in the red just looking at the share price return, but this is all pretty recent. I mean, it actually, before all this tariff stuff really kicked off, pretty much everything was I was seeing at least a little bit of a profit on. KRC, WP Carry, those were always pretty close. Clear Secure has always been kind of down as well, but not too bad. Not too bad. But now we have J&J, we've got Blue Owl, we've got Starbucks down in the red as well. So could be worse though, I will say. But anyway, guys, we did it. Those are we got through all of the questions. And there was one from Bilgan. I think Bilgan asked it a few moments ago. I think Bilgan, you said that you were having trouble receiving the spreadsheet to your email. Sometimes that happens. Sometimes it just goes into your spam folder or something like that if you put in your email on my website to receive the spreadsheet. If that happens to you, if you put in your email to receive the spreadsheet and you don't get it, just shoot me an email at ryan@retirewithryan.com, and I can personally send you the spreadsheet link. That's no problem. But that happens from time to time. Sometimes it'll go into your spam folder. So yeah, feel free to shoot me an email and I can make sure you get taken care of. So, okay, guys, before we close out, I want to just see what you guys have going on in your portfolio as far as the yield and growth rate. So Korean Cardboard has a pretty high starting yield, 4.35%. Doesn't know the dividend growth rate. That's okay. That's okay. Marcus here says no yield information, but dividend growth rate's about 6%. That's nice. It's pretty solid. So Derek says, not sure the exact percent, but I bring in $13.50 annually on a 50K portfolio. So that's pretty easy to calculate. Derek, just so you know too, all you need to do to find out your yield is take that $13.50, basically your dividend income amount, annual dividend income amount, divided by your portfolio value, so 50,000. And that is going to leave you with a 2.7% dividend yield. Not too bad. Good job. What else do we have here? Lucas, what's up, man? Good to see you. Oh, there we go. Teep says my yield is 2.76%, 2.87% if you include the money market. Okay, nice. Yeah, and I would bet, man, I would bet you've got a pretty nice dividend growth rate on that too. Oh, Andrew, these are really nice dividend stats. Wow, 4.1% yield on cost, 7% dividend growth rate. Good job, man. That's great. Lucas, what's the wife cooking tonight? I might actually be cooking. I might be making dinner tonight. We're gonna do some turkey burgers. We usually have turkey burgers like at least twice a week, sometimes even 3 times a week. It's always a staple here in the Williams household. Fun fact, it's so funny too. The first time my wife and I ever ate together, we had turkey burgers. The first time we ever met, we had turkey burgers. She had just it's kind of a funny story. I'll try not to make it too long, but we were planning on going out to dinner for like our first date. I had this grand old plan, and then I ended up getting the flu. This is no joke. I ended up getting the flu, and like I'm sick as a dog, fever and everything. And she's like, "Well, no problem. I'll bring you soup or something, and we'll like just hang out and watch movies or whatever." And at the time, I was living with my parents, and so she had just come from like a job interview, I believe, and she comes in sick as a dog, just sits right down. This is my first time meeting her. First time, she comes over to my parents' house. And first thing I do when she comes over is I make her a couple turkey burgers. And that was like one of the first things we ever did together. And now, 6 years later, we're still eating turkey burgers multiple times a week. It's just funny. Like some things never change. But I love that. I think that's I say that in a good way. Okay, but back to you guys. Let's see. So Kaysen here says dividend growth rate 8%, dividend yield 3.9%. Nice. Those are very solid. Very solid stats. Yeah, Aussie dividend about a 4% yield and a 9% growth rate. That's crazy. Good job. Michael's 5.5% yield, 4% growth. There we go. Nice high yield. BM Lashinsky, 3.8% yield, 9.6% dividend growth rate. There you go. Ooh, Pat, this is nice. Wow, look at that. Look at the difference between the yield and the yield on cost. Wow. So 4.47% yield, 7.1% yield on cost. Pat's seeing some very nice gains in the portfolio, and a 3.8% growth rate. There you go. Joey, 2.8% yield. Nice. Yeah, Kaysen, is the dividend is the dividend happy hour at the same time every Friday? Yes. So we'll wrap it up here in just a moment, but yes, the dividend happy hour is every Friday night, unless for some reason I'm not around. I wasn't around these last couple of weeks, but a normal week, most weeks throughout the year, the dividend happy hour starts at 5 p.m. Pacific time, 8 p.m. Eastern time on Friday. And just so you know, too, I always announce whether or not we have the stream, I always announce what's going on Friday on my channel. I always put out a community post about it. So if you're ever unsure, always head over to my channel, go to the community tab or my posts, which I think is what it's called now, and you'll see that I have listed out the time and stuff like that for the happy hour. I also announce it every single week in the Discord group as well. So if you're not in the Discord group, I highly recommend you check that out. It's free to join. It's just one big group chat filled with all of you characters. A lot of you characters are already in there, but at this point we've got over, I think, 3,200, maybe 3,500 even. We've got a lot of different investors in there. But it's a really good place. Like I said, it's free to join. Just if you want to chat dividend stocks with other investors, and there's a link to that in the description of the video. So definitely join the Discord group and check that out. Okay, guys, let's close this thing out. So Osvaldo, thank you again for the super chat again. Thanks for the motivation and group effort. That's really nice. Thank you, man. Oh, and then reading fun, happy hour. Man, you guys are throwing out super chats left and right tonight. Thank you. This might be the most I've ever gotten in super chat. So thank you guys. That's cool. Very cool. Okay. Yeah, guys, we are going to just wrap it up here. And last question. So in your spreadsheet, when you sell a stock, you have to delete all the dividends you entered. Okay, we'll close it out with this question. So no, not exactly. So let's say that there's a dividend log page here on the spreadsheet. So this is where I track all my dividends. Let's say that you sell out of a position. So let's say I decide to sell out of Williams-Sonoma, for example. All of the dividends that I've tracked for Williams-Sonoma, I would then just move over into the sold positions column in the number 1 spot. Number 1 spot is for my taxable account. Number 2 is for the Roth IRA. Portfolio number 1, portfolio number 2. So all of the dividends that I've tracked for that position, I would just move over into this column right here. And then I can delete this. And then what that does, because it's still accounted for here, it's still going to track the dividends received in my total return for the entire portfolio. So hopefully that makes sense. It's not a perfect science, but it's where we're at. So anyway, guys, what's up, Craig? Good to see you, man. But anyway, guys, yeah, we're going to wrap it up here. It's turkey burger time. Thank you all once again so much for hanging out with me this last hour and some change now. We'll be back next week. I don't think there's anything going on next week. So I will definitely see you guys next Friday night, 5 p.m. Pacific time, 8 p.m. Eastern time for episode 134 of the Dividend Happy Hour. And also, in the meantime, guys, I'm putting out a video tomorrow morning, bright and early, that I think should help you guys hopefully navigate a lot of this turbulence we're seeing in the market. I hope it does, at least. So I've got a really good video coming out for you on Saturday. I've got another really good video, really fun video coming out for you on Wednesday as well. So some good stuff coming up, and sometime soon I will reveal this new mystery position. Maybe in the next couple weeks, definitely before the month is over. I've got a really fun and different video planned, unlike any other type of video that I've done on the channel. But that won't be out till later this month. So like towards the end of the month. So I'll probably wait another couple of weeks before I reveal this position. With that said, though, if you want to know about it, shoot me a follow on Instagram, at Retire with Ryan. I'll just send me a message. I'll tell you what it is. So I'll leave it there. But you guys have a great weekend. Stay out of trouble. Chris says he thinks he knows what I bought. Shoot me a message, man. Let's see if you get it right. You guys all have a great weekend. Tune into tomorrow's video, and I'll see you in the next one.